The Nasdaq 100 hit our head and shoulders target this week, which I first called out on the 18th of September. I've included the link to that video in the description box below. Now that head and shoulders pattern was formed when the last CPI report was published, with the neckline at 12,180 and the top of the head at 13,722. Now price broke below that on the 15th of September and has not looked back since. Take the difference between the neckline and the top of the head, giving a difference of 1,542 points. If we then deduct that from the neckline, that gives us a target of 10,638, which hit on Thursday this week following the latest US CPI report. The latest inflation report came in higher than expected once again at 8.2% year on year when 8.1% was expected. It was a relatively quiet week up until the CPI report, though producer prices came in a day before, also higher than expected. The Nasdaq 100 rallied on Thursday after the US Open, and you might be thinking, why did US stocks rally when US inflation came in hotter than expected? This chart illustrates it well. It's a yield story. As the 10-year yield peaked, look at what happened to the Nasdaq 100. It started rallying, and that was the case all day. As the 10-year came off, the Nasdaq 100 pushed higher. This is because everyone is watching rates. You're even beginning to see political pressure from high-profile names sounding the alarm bell, with JP Morgan CEO Jamie Dimon suggesting the US will enter a recession in 6 to 9 months, whilst Cathie Wood is pleading with the Fed to stop raising rates. I mean, if your fund was down over 60% year to date. Now this is likely to happen more often, with political pressure likely to force the Fed's hand eventually to pause or even reverse the monetary tightening. But until then, keep a close eye on rates and treasury yields. So far today, price has remained volatile, hitting a resistance level and coming off sharply. Earnings season kicked off today, which has been mixed, with JP Morgan beating on earnings, benefiting from higher rates, whilst Morgan Stanley missed as deal making has dried up. Prices bounced off the 10,730 support level, and for bulls it's important price does not close the week below it, else we could quickly see 10,540, which is where this rally started on Thursday. In terms of bounce levels to watch the upside, 11,180 is a given, followed by the 20-day moving average at 11,230. Above that, and it's on to 11,480. The Nasdaq 100 is currently down around 34% year to date. This chart shows the annual percentage change in the Nasdaq 100, and it's edging closer to the levels seen from the stock market crash in 1974, the dot-com bubble in 2001, and the financial crisis from 2008. Earnings season continues next week with more bank earnings and big tech companies like Tesla and Netflix reporting. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.